Hi, it's Steve. Thanks for dropping by the Business Finance Hub. Today, I want to talk about interest-only loans that have matured and where there's going to be some problems right now, given coronavirus and where the banks are in terms of their assessment. So what I wanted to talk about was probably the major problem at the moment is banks not wanting to or willing to extend the interest-only term once it's reached that 5 years, whilst a lot of business owners are wanting to preserve cash flow and obviously keep repayments as low as they can. Banks just aren't willing to increase that interest-only term if it's already reached the maximum. So the people it's going to affect are basically the commercial property owners, that's in investors as well as owner-occupiers, where terms have matured, self-managed super fund borrowers, and I've actually got another section on what's happening with the self-managed super fund loans, but also residential investment property owners and business owners that are using commercial property as security for working capital facilities. Now, really there's only two options that you've got. One is either to refinance your loan to another bank, and that's a good thing in terms of you're able to get up to the maximum of 5 years interest only term again. So once that's set, you can forget and obviously keep those repayments as low as you can. Now, if a refinance isn't available, then the only other option is to basically make a request to your bank to extend the existing term or the remaining term. So typically for a commercial loan, they're taking over a 15-year term. What you should be doing is asking the bank to, if they're insistent on you making principal and interest repayments, is request them that they take that term over the maximum, which is 15 years, and then obviously spread those costs out. Now, you'll see here, I've just given you a bit of an example. So let's say you had a $500,000 commercial loan. It was over initially a 15-year term, but you've just come to the end of your 5 years interest only, then there's only 10 years remaining. So say an indicative rate of 5%, that's going to cost you about $5,303 a month as a loan repayment. Whereas if you compare that where you extend that term up to the maximum of 15 years, it brings your repayment down to $3,953. So ultimately that's $1,350 back in your back pocket. So the only thing I can say is that it's probably wise to talk to a broker if you've already got one. Have a chat to them about what options you've got out there based on your own circumstances. If you don't have a broker, happy to get in touch with me, and I can certainly talk you through about what options you have. And also, you might want to check out some other useful links in there that I've included that are important at this time, which is one, access to some unsecured lending for small businesses. Two is about the self-managed super fund loans and some changes and some issues there. Also some changes to the commercial property loan market, specifically the LVRs have been reduced, and also some information about how the banks are assessing credit applications whilst we're going through this COVID-19. So anyway, I hope you find this information useful. If you've got any questions, don't be afraid to get in touch. I'm always happy to go through anyone's options and look at scenarios that are available. Thanks again, and keep reading and keep watching for more useful information for finance, cash flow and sales.